Hi there, traders. This is Brad Gilbert with today's trading action. All right, now you got to love the calm markets, right? Not much out of the Don, which is good because we've got clear sort of directional markets. The dollar's going down, euro, sterling, Aussie, Kiwi going up, and that's all she wrote, right? This is like back to normal markets. You would never know this whole calamity around the equities going up and down 15% and everything else going on. But you know what? I don't think it's over just yet. And you know what? When you're looking at the a lot of these instruments, if I just come to the daily charts, you'll have a better idea of seeing it. A lot of these instruments are just back to where they were, right? Aussie back to where it was before the outcome. Kiwi just a little bit above. Probably got a little bit of room up here to go. So it's not like, yeah, these things are going through the roof. They're just correcting the initial fallout, right? Here's sterling. Okay, it's got a little bit more room to go on the top side. Euro is really not really performing. If anything, the market's got itself super short euro, and this looks like a blowout, right? A blowout on the markets. On the daily charts, you know what? If there wasn't any chance of Trump doing anything, you're going to be looking at getting into long-term trades here for these things to pull back. I mean, most of them are up 400 or 500 points, from the lows last week or a week or so ago. So just be aware of that. And when you come in and you think, yeah, this is all good, and all we can do is very hard to work out when a geopolitical event starts. A little bit easier when it finishes. And this one doesn't look like it's finished just yet, right? US steps up probes into pharmaceutical chip imports, setting stage for tariffs. It's like, man, can you just stop it, right? But the thing is, at least it's really focused. Looks like he's got a few shares in Apple because I think he said the 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 components of the iPhones and things have been exempt. Isn't it good to be friends with the president, right? That's one of the weirdest things. Um, Now the China and Vietnam have got together. Now they've been working closely together for a number of years, right? A lot of the work that was previously getting done in China is getting done in Vietnam. Now the tariffs on Vietnam are like 49%, 145% for China. So they're like getting together and trying to work out how they could screw the US. We'll have to wait and see how that plays out. But that's where we are. Now, let's just have a look like today, right? And primarily the next couple of days. Now, if I come into the live trade hub, right, and you're looking at the general markets at the moment, we've got a bit of a risk off profile for the today's sort of coming into the Asian session anyway. Now, one of the key instruments that I saw yesterday, which is about 150 points higher, sterling CAD, right? And this is in play, right? If you missed it, well, it's a little bit late to be getting in. But why am I mentioning that? Because this week we have some integral data that really gets that cross in the zone, right? Obviously, it's pretty clear. You got UK employment numbers and Canadian inflation numbers today, right? So you've got that sterling CAD trade in play, and I've just done. I'll show you in a second. Trading the crosses, really focusing on sterling CAD to give you a better way to analyze the crosses and really fine tune where is the soft point here. Now, inflation numbers, excuse the pun, trump the unemployment numbers, right? And this time round, with the Bank of Canada rate decision tomorrow, and with a line ball decision, it's like 60% factored in, there'll be no change of rates in Canada. But if the number comes out lower than 2.5%, the Bank of Canada is going to be under pressure to cut rates tomorrow. So it's going to have a big influence. A stronger number takes the pressure off the Bank of Canada. So to me, sterling CAD, right? If I just clear the screen, you've got sterling CAD, two fundamentals. You've got inflation numbers coming out again tomorrow with alongside, or not alongside, but the good thing is it's about, what is that? 5, 6, 7 hours later, you got the Bank of Canada rate decision, right? So we've got multiple sterling and Canadian numbers coming out. Makes sterling CAD the perfect choice. Now, without getting hung up on sterling CAD, don't forget to have a look at, these instruments by themselves and also against their other crosses, right? That's where you'll find a little bit of homework, right? If you want to call it that, a little bit of research can go a long way, right? Now, if you're looking at how to potentially do that, Well, I just did run a Trading the Crosses live coaching session, and I know it's not ideal for everyone's time zone, but check that out here. If it ever populates here, browser's gone to sleep. So just have a look at that because it will give you some insight into how, or give you some different ways to look at how to trade the crosses. Right, it's a bit of an eye opener that will pay dividends, and in particular, as I said, it's quite relevant to obviously what we're about to do. Um, the short end of it is right for me. Sterling CAD is going up. Right, the cross is going up. All we need is the UK employment numbers, and there's about 5 different numbers. So don't just get hooked up on the rate. You want to check out all of them. But if that comes out as expected or slightly better, right, like a lower number is better, and then you get the inflation numbers coming out weaker, which means pressure on the Bank of Canada. Doesn't mean they will cut rates, but they'll be under the pump, especially if it's like 2.2 or something. That would go with the upside in sterling CAD. It's a no-brainer, right? And if I just give you a look at my charts, you can actually have a look at this. Coming over here, right? And I've got sterling CAD here. I've got the Canadian dollar inverted. So it's CAD against the US, which is the green bars. You can see it's rolling over. Sterling against the dollar is still sort of going up or steady. It's prime for a correction, and that means sterling CAD topside, right? This is the cross. These are the two individual components. As I said, go back in and have a look at that video because it'll show you exactly how to find this on Metastock and how to really fine tune your trade selection. Right, this is the video there, and that's all she wrote. That's what I'll be focusing on, guys. You don't have to go looking for trouble. Just let the market guide you into the opportunities. Outside of that, we've got good trading conditions, right? Just fundamentally looking at the charts, the majors on the hourlies look great. They all look a little bit stretched. And then you come back in and have a look at the global markets dashboard, just tick off what's going on. Equities, they are down, but look at this, like it's 0.1, 0.09, like hardly any movement. So don't get overexcited. I think the dollar is in for a bit of a run. I mean, Treasury yields are pretty steady. They've drifted back a little bit since yesterday, but steady overall. And so we are starting to get in. This is like got great shape. We've got loads of inflation numbers this week. We've got central banks. We've got everything, right? All we need is Trump to shut the trap and we're good to go. All right, guys, have a good one. Cheerio.